Hey everyone, welcome to the replay of our Apple deep dive. In this video, Brian Stoffel and I are going to show you how we broke down Apple stock from scratch using AI. That includes covering its moat, risks, valuation, growth potential, and more. And if you watch the video to the end, you'll understand why it's one of the most powerful buyback machines in history. Let's jump in. We are going to be researching Apple's stock using Stock Simplifier. So this is the framework that we're going to be using and following along with Stock Simplifier. There are 7 different components that we're going to be looking at today. If you're unfamiliar with Stock Simplifier, it's a course and tool that we have. So if you do have Stock Simplifier, you do get access to the full course. We basically explain everything we're about to do in detail. You get access to the spreadsheet checklist, the checklist tool that we're going to be using throughout this. You get access to all the AI prompts that we're going to be using throughout this. And that's what you get with Stock Simplifier. So I'm actually going to pull up Stock Simplifier. So here it is. If I click this
Awesome.
all cost material buttons, I'm going to get a couple things going. So I'm going to pull up a fresh, the spreadsheet tool. I'm going to use the cheat sheet. I'm going to open up a fresh copy of Fiscal AI, and I'm going to be pulling up the AI database that we have. So just got to make a fresh copy of Stock Simplifier, and we're going to be researching Apple stock. So the ticker symbol there is AAPL. And I'll zoom in a little bit.
While you're doing that, Jason, I believe was with us yesterday, said he tried the first AI prompt on Apple on these AI tools. Copilot and Grok gave me a chart. The others didn't. Any reason why that would happen? I'm not totally sure. Sometimes it gives us the readout that we want. Sometimes it doesn't. But we'll show folks what we mean by that.
I'll get a copy of ChatGPT going as well. But okay, so step 1 here is figuring out which phase of the business growth cycle Apple is currently in. And let's do a poll here, just without doing the prompt just yet. Let's ask people, which of the 6 phases do you think Apple is in right now?
Yeah, so I'm going to launch that poll, and you can say 1, startup, 2, hypergrowth, 3, break even, 4, operating leverage, 5, capital return, or 6, decline. And we've already got in just 15 seconds half
We'll
of
let
our.
we'll let those go. We'll let those come in. I will say with Stock Simplifier, a key reason we do this research or we ask this question first is it controls the rest of the checklist. What phase the company is in influences what metrics you should look at and what valuation tools that you should do. So that's why we put this first. Now we do have a full tool here that we can use to fill in, and this will help guide us with which phase the company is in. So what is the answer here that people have?
Yep, 71% said stage 5 capital return. Pretty much everyone else said stage 4 operating leverage.
Okay, stage 5/stage 4. I don't like that Zoom keeps pushing this like right the poll right in my face. So to figure out the stage, we're going to look at 3 key things: revenue, operating profit, and shares outstanding. Those will tell us which phase that it's in. But we're going to be letting AI do the analysis for us. So here are our Stock Simplifier prompts. I'm just going to click right here to make a copy of the business phase analysis prompt. I'm going to go over to a fresh copy of ChatGPT, and I'm going to paste it in there. If ChatGPT is cooperating, it's going to say, what company would you like me to analyze? And I'm going to say Apple, ticker symbol AAPL. And let's see what phase ChatGPT thinks that Apple is in. All right, we got an answer.
Hey.
And let me zoom in a little.
And for those of you wondering, you can use ChatGPT. You can also use this with Copilot. You can try it with Grok, Gemini, Claude, what have you. This is just the most popular one.
Yeah, and ChatGPT, I like it has the links right next to it. The other ones don't do that, even though we instruct them to. So yeah, we use ChatGPT because it's the most popular AI LLM, but you can use it on all of them. Okay, so according to ChatGPT, Apple is in phase 5, the capital return, and we have programmed it to give us a confidence level. And it says it's highly confident in that. Now, where does that confidence come from? Operating income was 132 billion, so that's a positive figure, and it's up.
Yep.
Revenue grew 2% year over year to 390 billion. And is the company returning capital? Yes, it's not only paying a dividend, and it has 100.
Look at the size of that buyback.
Yeah. Well, it does say authorized. It doesn't say
Sure, sure, but still, that's a big authorization.
So because it's in phase 5, it says the most useful valuation methods are price to earnings trailing, price to free cash flow trailing, and a reverse DCF. Why? Because this company is mature and stable, and we should avoid price to gross profit and price to sales. So I would say that that's pretty spot on, and I
Yeah.
love that it uses the most recent 10K and 10Q, and then it says, look at that, stop here. So I'm going to agree with that analysis, and I'm going to check the box that says we're in phase 5 capital return. Would you agree with that?
Yep. I would definitely. Hey, look, if you're growing 2%, you're not in stage 4 really anymore.
Yep. We got a comment from Jason saying that the input you get back varies from AI tool to AI tool. I would say that in some cases that is true. Sometimes it varies even within ChatGPT. So if you can always click this button right here to have it rerun it again, and sometimes you can get a different result. We have done everything we can to make these
Yeah.
prompts as robust as possible, but it's still
I mean,
AI
some
is
of these are on their
does its
18th
thing.
version, right?
What?
Some of these prompts are on their 18th version.
Yeah, yeah. Many hours of our lives have gone into doing that. So okay, we have the phase. We have the phase. So it's a phase 5 company. I agree with ChatGPT's analysis. The
Yep.
next step is to figure out, what does this company do? What does this company do? Now, in Stock Simplifier in the tool, we're going to be looking at this item right here, and there's really 3 potential outputs. It's I'm confused, I understand, or I'm excited. Red, yellow, green. We tried to make it nice and easy. Now, to analyze that and get that information, there's a couple of questions we want to ask. The first are foundational. What does the company do? How does it make money? Who are the customers and where does it operate? The next 3 are more qualitative, more of, is this a good business? And we ask,
Yeah.
how often do customers buy? Can the company raise prices? And what happens in a recession? So I'm going to go through and I'm going to make a copy of this prompt. I'm going to go to back to ChatGPT, paste it in, and ChatGPT should be able to find that information I see it using Apple's most recent annual
Yeah, just
report.
assumed. Yep.
It says using the most recent 10K and the 10Q that was filed in March, and there are the links to it. Gives me confidence that it's right. What does this company do? Apple designs, manufactures, and markets smartphones, the iPhone, personal computers, Mac, tablets, the iPad, wearables, Apple Watch, AirPods, and provides a wide range of services, including digital content, cloud, app store, and payment services. That looks pretty spot on to me.
I love this next part. This next part's my favorite, most useful part for me.
Yeah. How does it make money? As of last year, iPhone sales were 51% of total revenue, 201 billion out of the 391 billion in total sales. Services were 24.5%,
Well,
96 billion.
that's a big deal. Services are a quarter of their, because those are high margin.
High margin and more recurring than iPhone
Yeah,
sales would
that's
be.
a
Yep.
big deal.
Wearables are 10%, Mac is 7.7%, and iPad is 6.8%. Now, I'm not going to take ChatGPT's word for it. I'm actually going to back them up. So let's go to Fiscal, and I'm going to pull up the financials for the company. And this is a cool feature. If we go over to key metrics and sources, oh, got hung up on something.
Everybody's watching is doing the same thing as you, and we're crashing the page.
There you go. Okay, so here we are. So we'll go to segments and KPIs. And we can actually pull up, let's do these. So iPhone revenue. Let's pull up services. Let's pull up, what's next biggest? Wearables, Mac, and iPad. And if you do that, you can kind of see them all broken
Can you
out.
stack them?
But if you stack them, if you push this button right here, it puts them into one kind of continuous view. And then let's go ahead and scroll this to being like the last 5 years. And what we can do is you can see visually.
I think the numbers look about right, because that blue looks like it's about a quarter.
Yeah. So this is iPhone revenue. This business is growing 9%. At least it has over the last 6 years. If you look kind of like year over year, I mean,
yeah. What if you bring it to 22? I'm just curious. If you were to just give us the last 4
from 22.
years.
So after, so more. Okay. So And over this period,
Flat.
zero revenue
Yeah,
growth. Yep.
pretty
So
much flat.
losing to inflation. Services is growing
No,
35%.
no, no, no. It's growing 11, 11.
You're right, 11%.
But
Yes,
still, that's pretty good.
35% total, double digit. Wearables is
Down.
minus
Hmm.
5%. This business is actually declining. Okay. Mac revenue is minus 7%. And
iPad.
iPad is -2. So really, it's really services that has carried everything. Now, to be fair, there was a huge amount of pull forward.
Yeah, yeah,
If you go back to say 2019, that might be a closer view. But
yeah.
yeah, so very modest growth, especially in the last couple of years for each of these business segments. But the numbers here look pretty good. All right, next, who are the customers? A global base of end consumers, individuals such as me. Within 5 feet of me, I have about 6
Yeah,
Apple
I'm looking now.
products.
1, 2, 3,
Enterprise and
4.
education
Yep.
customers, indirect channel partners, so your Best Buys and your Verizons, and its trade receivables showed significant third-party cellular network carriers. Okay. Geographic breakdown. The Americas were 43%, Europe at 26, China 17, Japan 6, and everywhere else about 8. All right, time for the
Yeah, this is the big
qualitative
one.
pictures. How often do customers buy? There's a mix. Many product purchases are large one-time or upgrade purchases. Yup, spot
Hmm.
on. Services revenue tends to be recurring over time. Deferred
That's why it's
revenue.
such a big deal that it's grown so much.
Yeah, that's the jewel of this business. Is
Absolutely.
the subscription is the service businesses, and then the company also notes active install base of devices across all products and categories. Okay, can it raise prices? Yes, Apple has some pricing power. Gross margin rose to 37.2%, up year over year. Gross margin on services
Whew.
increased by 300 basis points. And the 10K states that gross margin can be impacted by product mix, competition, and pricing pressure. And while Apple has demonstrated some ability to maintain product and margins, it's exposed to pressure. That seems like a pretty fair analysis to me.
Would you say the App Store is probably the largest driver of those services? Because don't they take like a 30% cut of
Yeah,
every? I mean, that's
obscene.
huge.
It's enormous. Yeah, it didn't seem enormous when they debuted it, but
Right, but it's grown.
it's huge. And then finally, what happens in a recession? During weaknesses, Apple says it depends significantly on global and regional economic conditions, and that adverse conditions can material adverse uh, sales. 2023 total sales declined 3%. And because hardware purchases are discretionary, the business may see slower upgrades or delayed purchases. I would say that this analysis from ChatGPT was spot on.
I totally agree.
Yep. All
Totally
right.
agree.
So now that we know that, would love to poll the audience here. What do you think about Apple, the business? Is this an attractive business? Just a business model? Yes, very attractive. Yellow, it's kind of attractive. Red, it's an unattractive business.
This is landing right about where I would have done. I'm just going to let it run for 30 seconds, but I hadn't dove in recently to see how big services have become, and I think eh, that's really key.
Yep.
It's a big deal. All right, I'm going to end the poll, and what we have is 52% give it yellow, kind of. 45% give it green. Yes.
Yep.
So a greenish yellow.
I would go with yellowish green. I think the business model is largely unattractive. Consumer electronics business has historically been a unattractive business and business model. Apple has transcended that with the moat that it's created, with the brand that it's created, with all the factors we're going to talk about next. But I would say from a pure business model perspective, it's one of my least favorite business models of the Mag 7.
Sure. That's fair.
Okay. Here we go. By the way, if you want access to all of the prompts and all the tools that we're using with Stock Simplifier, it's normally $199, but if you use the link that Stoffel is going to share in the chat, you can get a Stock Simplifier for $99. That is a one-time payment. It's not a recurring payment. It's a one-time payment. You get access to basically everything that we're using throughout this video.
Yep.
in series. All right. Next question. The moat. Does Apple have a moat? Again, 3 categories largely. No, or the moat is weakening. Yes, it's narrow or it's stable. And green would be it's wide or it's expanding in nature. Now, there are 5 primary moat sources to look for. There's 3 current states that it could be: no moat, narrow moat, wide moat. And then there's moat direction. Which direction is the moat heading? Moat direction to me would probably be the most important thing to look at here. I would rather invest in a narrow moat company that's widening than a wide moat company that's shrinking moat.
Yep.
Okay.
Totally agree.
So what do
So
people think?
yeah.
What is Apple's primary moat source? If you had to pick one, what do you think is Apple's biggest source of moat right now? And
And I know, I I would encourage everyone to think about their own life as well, because when I do that, it becomes pretty clear to me what I believe the primary motive is. And Brian, before I mention it, because I don't want to affect what our audience has to say, back when you sold, back when I sold, this was less important back then. These days, it is to me, much more of a valid moat.
yep, there you go.
All right, we've got about 2/3 of people have answered, and we've got pretty much 3 things that rose to the top. Number 1 was network effect. So each user makes the platform more useful. Number 2 was switching costs. So it would be painful to switch. And number 3 is intangibles, which I'm going to assume people mean the brand value.
If I had to answer this, I would personally agree with network effects, but
Why?
it's not the classic quote unquote network effects.
Okay,
To
tell me more
me,
about that.
the strongest reason why I keep buying Apple products is because I already have Apple products and the Apple products play nicely with each other. And there's an
Oh, so
ecosystem. So it's a hyper localized network effect that keeps me involved and that the products all talk to each other and play with each other. I can find my daughter's phone by using Find My system, which is a hyper localized one. When I do a group chat, I'm a blue thing. I'm not a green thing like Android users. So I would agree with people that say network effect, assuming they mean the ecosystem is the network
yeah,
effect.
well, and so mine is switching costs, but it's the same reason. You and I are noticing the exact same phenomenon, just calling it something different. Like
Sure.
the reason that I wouldn't switch is because all of my things talk to each other.
Okay, so let's see what ChatGPT says. And by the way, if you didn't say that, if you said something else, I don't think you're wrong. I think Apple has numerous moats working for it, and it's going to say what company. I'm going to say Apple, AAPL.
I would even say like low cost production, the App Store, they're able to collect money for other people's work at a lower cost than anyone outside of Google.
All right, so moat for Apple is wide. It looks stable. There are switching costs for Apple and intangible assets. Apple's hardware software ecosystem
Same
creates
thing.
high
Yep.
switching costs and a global recognized brand with an operating margin of 31% supports the thesis of a durable competitive advantage. So, one at a time. Switching costs is present, it's wide, and it's stable.
Agreed.
Customers who buy Apple devices often engage in multiple device types, me, and integrate with services,
Yep.
me. This creates friction to switch to another ecosystem because it means losing integrated devices and content. Apple reports a large and growing service business, suggesting stickiness. And then there's some numbers that go along with it. I agree with that.
Yeah, Madhu even pointed out, and I think this is great, that it's a pain to even switch WhatsApp, like within an app going from Android to Apple.
Good. Okay, there you go.
Yep.
Number 2, intangibles are present. It's a wide moat and they're stable. Apple's brand is one of the most valuable in the globe. Its software, hardware integration, its ecosystem raise perception and pricing power. I totally agree with that. Totally agree with that. And I would also say it's pretty stable.
Mm-hmm.
Network effects are present. It says narrow with potential to widen. Apple's ecosystem generates network benefits. The more users that buy Apple devices, more developers build for iOS, which improves app offering. So I don't fully agree with that because so many companies develop an app and they put it on both Android and
Yeah.
Apple. So I don't view that as a network effect personally. Less obvious, dominant, and hence qualifies for narrow rather than wide. Yeah, that's what I would say. Low cost production, it's saying not present. While Apple enjoys scale and margins, its cost structure is not obviously lower than its peers. What would you say to that?
I haven't really dove into it, but again, in general I agree with it. The thing that I was talking about with the App Store is uh, there are many different ways that you can interpret that, and so I think they're just talking about the products, the computers, the things that you can hold, and I agree with that.
Yeah, I would say so too. And then I would say no counter positioning at all. Now, biggest risks are slowing hardware growth, the competitive landscape, Samsung, Google, and others. And then Morningstar gives it a wide moat, uncertainty of medium, and Morningstar's my analysis aligns with Morningstar's switching costs and intangibles principally. So AI agrees that there are switching costs involved. Excuse me, that Apple has a wide moat, and I would agree with that.
One quick thing, Brian, because I've remembered we've got a bunch of people tuning in now on YouTube as well. So I put the link for Stock Simplifier in the YouTube chat as well.
Great, awesome. Thanks so much for joining. All right, up next, long-term potential. Does Apple have growth potential? We already seen that Apple's growth over the last couple of years has been fairly meager. Is there reasons to believe that this number can go higher? Now, how do companies grow? There's only two ways. One, you get new customers. Two, you get the customers you have to spend more money. And there are subcategories. So in new customers, you can grow your sales and marketing. You can get new distribution, new markets. You can make acquisitions. To get new customers to spend more, you can say, hey, here's we're going to raise prices. We're going to have new products or new services, or we're going to improve retention. Now, in Stock Simplifier, we teach you to go to the overview section in Fiscal. And if you look at the growth section here, one thing that I love about Fiscal is it shows you right here, over the next 2 years, Wall Street expects revenue to grow about 6% annualized. And over the very long term, earnings per share is expected to grow 10% annualized over the long term. If you have a premium subscription to Fiscal.ai like I do, you can actually see the revenue growth targets. Now look how wide the band is
Yeah, it's
for
very wide.
the high and the low. But analysts believe that this company is going to grow its revenue. Now for this one, I'm actually gonna run the prompt first.
Mm-hmm.
And then we can get people to vote on whether or not they think Apple has long-term growth potential. So there's the prompt. It's going to check each of those 7 categories for us and give us a summary. All right.
All right.
Apple. The top drivers are geographic and market expansion, new customers, and new products and services for existing customers. So sales and marketing investment, moderate. It says R&D expense rose. Well, that's not sales and marketing expense. So I would say you got that. At least the evidence is wrong.
Come on, ChatGPT.
New distribution channels, moderate. The company is expanding advanced manufacturing in the U.S. with Advanced Manufacturing Fund. Is that new distribution channels? Not really. No, I would say that that's wrong. Geographic market expansion. Europe sales grew 11% and the Americas grew 4% in China, while China was down. So this is saying this is a big area of growth for the company, is penetrating new markets.
Certainly could be.
Definitely could be. Acquisitions are moderate. I mean, this company famously does not make big acquisitions, which is a strategy that I personally like. All right, so not a lot of growth there. Existing customer expansion, pricing power, yes. This is a growth avenue for the company, is to raise prices. New products and services, yes.
I mean, that's been like the thing, right, for over a decade now, right? Are they going to come out with a car? Are they going to come out with glasses? Are they going to come out with,
So far, it's been mixed results.
Another iPhone.
Yep. Although I did see that the AirPods business, if that was like spun out, it'd be like a $10 billion business.
I believe it. Those AirPods
unbelievable
are awesome. They're awesome.
Business. Yeah. But $10 billion is like 2% of revenue.
Yeah.
So the curse of being massive. And then customer retention, this is a modest avenue for the company. So it says the biggest drivers are geographic and market expansion and new products or services. Secondary is pricing power, and untapped opportunities are acquisition. So I would actually love to see what people think. Do you think Apple has good growth potential? Yes, great growth potential. Kind of, it's totally moderate. Or no, you don't buy that this company can grow anymore.
And what's so interesting about this too is, you know, is also how important is that growth potential? Because I remember when Steve Jobs passed and the torch was passed, I was thinking, is this going to be a stock worth owning anymore because the visionary's gone? And it's just trounced the market since then, even though they really haven't come up with that many new products.
No, it was the COVID. I've been extremely impressed. COVID, they grew hugely. They grew like 40% or something like that during COVID. I thought that that was going to be followed by a crash after, but they've
Mm-hmm.
actually done a good job of maintaining revenue growth. So to me, flat for this company over the last couple of years is actually quite impressive,
Yep.
given the headwinds that they've had. All right, what do people say here?
Yeah, so it's kind of like a normal distribution. 2/3 of people said kind of, 21% gave it a green, 13% gave it a red. So, but by and large, I would say a yellow. And I just want to two things that came in through the chat. The iPhone 17 series, which dropped in September, is outsold the 16 by 14% in the US and China within just its first 10 days of availability. And Olivier was asking, could Apple become an investment that yields decent dividend yields?
Yep. Yep, those are all good questions. The thing that we'll check into later is remember that analysts were forecasting 10% earnings per share growth. I would surmise that a substantial chunk of that is due to stock buybacks, not
Mm-hmm.
necessarily operational gains. But if the new iPhone is selling 14% better than the last one, considering what's different about it, it was just like
I don't know.
looked the same to
I'm like
me.
six versions behind usually.
Yeah. Anyway, okay. That's what people said. I would agree. I would say kind of. I view this as almost like mid single digit growth
I,
is most likely moving
do you
forward.
get orange when you mix yellow and red?
Yes.
I'm an orange
There
then.
you go.
That's what I am.
There you go. There's an orange. Okay. As a friendly reminder, if you want the tools and the AI prompts and everything that we're using to research this Apple and all the Mag 7 stocks, there is a link in the chat for Stock Simplifier at 50% off, $99 bucks to get everything. One-time fee. All right, next, key metrics. Key metrics to look at. So one thing that we love about Stock Simplifier is the metrics that you use to analyze a company. These change depending on which phase the company is in. So you pick a different phase and the metrics change. So that's such a critical thing if you're going to be analyzing companies. It's a huge
Yep.
mistake to judge all companies by the same metrics. Metrics change over time. You need to adapt with them. So Stock Simplifier tool will do that for you, but we are going to use the AI prompt to do that analysis. Now, one thing, if you've ever used AI, you know that it doesn't always get the math correct.
Yeah.
So we'll double check their work. So what company? Apple. We're going to put in
Phase
AAPL, and I'm also going to say this is a Phase 5 company.
Mm-hmm.
All right, it's going to be using the 2024 numbers. All right, well, so far, at least the top one is correct. So it says revenue growth is a red. It's
Yep.
currently about 5%, a 3-year growth rate of 5.4%. That's well below the 10% target. So I think that is spot on. Free cash flow conversion, this is green. Free cash flow was higher than net income. Very impressive. Great to see.
Mm-hmm.
EBIT to interest expense, the debt is high, but interest expense is relatively low. The company effective has debt light in practice.
Oh, I like that's pretty good.
Yeah,
That's a pretty good output
analysis.
from ChatGPT.
Yep. ROIC is not publicly disclosed, but margins are strong. But ROIC of 20% is not confirmed. Well, that's why we have Fiscal AI, and we can see the ROIC over the last 5 years is 28%. And
Wait. ROIC's down at the bottom. It's
you're
actually
right,
34%.
33%.
Yeah.
And this says that the revenue growth over the last 3 years has been 1.8%. So it got the red correct. It got the number a little wrong. So that's wrong. And then capital returns, yes, for 5+ years. Dividends and massive buybacks have continued for more than 5 years. So
No
strengths for this
question.
company is free cash flow conversion and the capital return program. I would say that is spot on.
Hmm.
Concerns are revenue growth and the ROIC. I would say that ROIC is a key strength.
Yeah, it couldn't calculate it, so it
Yep.
didn't
And
know.
critical points to watch is revenue growth rate. Totally. This to me is the story. Do you
To
believe that Apple has revenue growth rate?
Yeah, to me, if I had to check one thing, the first thing that I would actually look at would be their service revenue. Don't get me wrong; I think them selling the iPhone is critically important, but we're going to get to its valuation in a minute. Given the valuation, I just feel like that service revenue is so important.
Yep. So we would have red, green, 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 green. So yeah, good job, ChatGPT. You got that one. You got that one correct. Okay. Let's pause for some questions. Do we have any questions
Yeah.
that we've seen so
So
far?
Jorge is saying that China remains the main center of Apple's manufacturing. Wouldn't that be another major concern?
Yes. We haven't gotten to risks yet, but yes.
Yeah, I would agree too. And let's see. I'm just looking on YouTube. We've got someone saying the moat is definitely there, but it seems too richly valued for such a mature company, which I
We'll get to
totally agree with.
valuation next. Yep.
Yep. And then someone asking on YouTube where they can get the link to attend this via Zoom.
Oh, if you sign up, we've shared it in our community posts and stuff like that. It's longtermmindset.co/mag7.
Hmm.
If you check the community section of YouTube, there is a link to do there, and then we email you the replay and all that kind of stuff. Yeah, join us on Zoom because then we could take your questions as we go. All right, next section then, risks, key risks. Brian, in Stock Simplifier, we teach people that all risks in business can be boiled down to one risk: execution risk. What are the things that will prevent, what are the risks that will prevent this company from achieving the financial results in the future that you want it to? All risks are just sub risks that add up to execution risk. That to me was a very key insight that we came up with. That it's really about, can the company execute or not?
Sure.
Um, so,
Absolutely.
so there are 4 categories of sub risks that we think are the most important to pay attention to: concentration risk, disruption risk, outside forces risk, and competition risk. So let's go ahead and use the prompt that we've built. It's right here.
Now, before you run it, I'm just curious. You can type it in. I know what I think my biggest one would be. I'm curious what you think. I actually think outside forces, like if they were to lose permanently some of their services revenue because
Yep.
of monopolistic practices,
Regulatory.
I think that would be a bigger deal than most people think it would,
That
because
to
that's
me is
such high
that to me
margin
is the
revenue.
number one risk as well.
It's such high margin revenue.
Yep. And they just dodged a bullet earlier this year with Google paying them 20 billion or something like that. That's a huge chunk of gross profit. Okay, so ChatGPT says medium risk, outside forces and disruption, highly diversified global operations, and a strong brand ecosystem lock-in help to mitigate those risks. So concentration risk. There's no one customer accounting for 10% of
Oh,
sales.
here's the next part though.
Apple states it relies heavily on third-party suppliers, mainly in Taiwan, China, which could pose supplier
Yep,
concentration risk. So
there
not
you go.
customer concentration risk, supplier concentration risk. It's a
T-
low risk, but it does remain moderate. How would
tons
you
of
think about that?
I I think you just have to think about, like, that's why they're building in the States. But the way that I would think about that is that if something happens in a trade war, they're going to have to raise prices. Now, everybody else is going to have to raise prices too that gets their things from China. So it could affect everyone equally, but that could significantly cramp down the pool of money that's available to make these purchases in the first place. And I just also want to mention, a ton of people in the comments section saying, read at the book Apple in China.
Oh, okay. Didn't even know there was a book called that.
There you go.
All right. Number 2, disruption risk. It says red, and this is trending down. Apple warns that new products and services may produce lower revenues and profit margins in the future. The company faces significant technology risk from AI, mixed reality, and shifting consumer demand, and significant risk from disruption. I would personally think of this as yellow
I
because
would too.
while these are potential risks, we definitely have not seen evidence that these are eating into iPhone sales. They're
Yep.
not eating into iPhone sales yet.
Yep. I
So it's
agree.
more of a theoretical potential risk than it's like, wow, this is something you really got to pay attention to.
Well, and and disruption being separate from competition, like they're talking about something that could replace all the things we just mentioned, and that's hard to see.
And they already put their foot in the door with the mixed reality with their Vision Pro. I know that
Hmm.
that was been a flop so far, but they've at least debuted it. Okay, outside forces, red. The company's global
Totally agree.
operations are highly exposed to trade restriction, tariff, export controls, and geopolitical tensions, foreign currency fluctuations, and no mention here of regulatory, which is
Yeah,
interesting.
that's surprising.
Yeah. So I would say I think that this is spot on, but you missed a big one.
Yep.
And then
Yep.
finally, competition. Yellow. It's got plenty of competitors that do that. And then we have a nice little visual at the bottom here. And then they have their defensive positions and more. So let's run a poll, Stoffel. What do
Yep.
people think? What do you think? Is this a high risk company, a medium risk company, or a low risk company?
I'm just trying to think to myself what I would give
Yeah.
this
And
because
let's clarify that we are specifically talking about the business. Is the
yeah.
business medium risk, high risk, or low risk? We're going to get to the valuation next, and valuation does change the risk profile from the investor perspective. This is only focused on is the business high risk or low risk.
Right. All right, we've got a pretty clear winner. We've got basically 3/4 of people are saying yellow, medium risk, and then everybody else kind of fell on the other sides of that coin.
I would agree with that.
Yeah.
I would agree with that assessment. All right, next. By the way, Stock Simplifier is $99 for anybody that wants it. All the tools that we're using to do this analysis. Okay, next risk or next thing to check. Finally, we know about the business. We've done all the analysis. Valuation time. Valuation time. Do we think this is cheap, fairly valued, or overvalued? Now, one of the reasons we did the business growth cycle analysis first is because the valuation method that you should use changes depending on which phase the company is in. We have identified that Apple is in the capital return phase, so the primary method that we should judge it is the PE ratio, with the secondary being the price to free cash flow. Note these are trailing metrics, not
Hmm.
forward metrics. That's a difference between phase 4 and phase 5.
And this answers a bunch of questions that people on YouTube had about what to use. So
Great.
we'll go ahead and use those too and see what we find.
Okay, so let me close out these.
I always find this very interesting too.
And we'll go to ratios. And then we have the trailing ratios here. So we're going to go to price to earnings, PE, first. This is trailing price to earnings. So here it is over, what's that?
About 5 years.
Yeah, it looks like a 5-year period. All right. There's the 5-year PE. If we put this graphing line button and we do middle, high, low, we can see what the trend is being. So this is traded at an average of 28 times earnings over the past, let's
Five
call it
plus.
6 years. Currently 39 times trailing earnings. It hit 41 in the end of last year. Currently 39. It looks like it got down to about 20 below its
Now I'm curious.
6-year
I'm
trend.
curious what we'll see with free cash flow because we saw that free cash flow is higher
Yep.
than earnings.
So let's hide that. So that's what it says there. Now let's go to free cash flow. Yeah, that's a good point. Let's take a look at
Oof,
price to
but
free
still,
cash
I,
flow.
I think we're going to see the same thing here.
This is a company that is trading at, where's the high?
goodness.
Is it currently at? It's currently at right now. It's at a 6-year high price to free cash flow of 40 times free cash flow. Can we make this longer?
Yeah, you can just make it to go to like '06. Sometimes it's like unplugging it and replugging it back in. It should adjust.
All right. So this is a 10-year chart.
There you go.
It's been 10 years. This is when I sold back at I sold at 11 times price to free cash flow. Now it's 40 times price to free cash flow. So the 10-year average
Woo!
is 23 times price to free cash flow. I have a feeling I know how people are going to vote. But what do you think of Apple's valuation today? Is
It's
it
been a while since I've
undervalued,
looked at that.
fairly valued, or is it overvalued?
Well, I had no idea. How big is it right now? What is the market cap?
I'm going to guess 3.6 trillion.
I'm checking right here on my computer.
3.8 trillion.
Hey, pretty good. Pretty good.
3.8 trillion.
And as Thomas said, I think we just found out why Warren Buffett sold. Our poll says 3/4 say overvalued. The rest pretty much say yellow. It's fairly valued. So there you go. Brian, before we do anything else, there is a good question in here from Cass. What do you think about Apple's competitiveness if we were to have a recession? I'll give my answer first because I've had some time to think about it. But my answer would be if it is a mild recession, I actually don't think that's a huge risk. And the reason for that is that iPhones and Apple products tend to be much more expensive than Samsung, Android, what have you. And because of that, the consumers of Apple products are usually a little bit more shielded. Now, that doesn't mean that they wouldn't experience a slowdown, but I just think that it wouldn't be, pull your hair out painful. If it was a deeper recession, especially if that recession was accompanied with a big stock market decline, because when the stock market goes down, those very same people that usually have higher incomes suffer bigger losses, and they tend to be a little bit more sensitive to those stock market declines.
Well, I like to look at history when making decisions, right? So this is Apple's revenue growth over the last 20 years. Man, is that a pretty chart, right?
Yep.
Beautiful. So big recession here, '08 to '09. Revenue grew. To be fair, this was like iPhone launched here.
Yeah.
So they were able to hugely buck that trend. Looks like they had a big spike here and then it declined. So revenue did decline even when things were going up. Huge jump here for COVID, right?
Yep.
Huge jump for COVID, and it's largely traded sideways over the last.
Or sales have been sideways.
Yeah. So I sold here, and my thesis was I don't think the growth is going to be sustained, and they've just about revenue is up about 80%. Over the last 10 years, but the valuation is up 4x, right? The valuation is almost up 4 times. So if a recession came, my hunch is that revenue would decline. I don't think it would decline tremendously, but my hunch is that it would decline.
Yeah.
Okay. Okay. So all in, taking everything together, we would love to know your thoughts. Are you interested in Apple's stock today? So there's not interested at all. Not interested at all. There's yellow, which is I'm interested at the right price. So great business, but not at the wrong price. And then green would be I'm interested today.
And I'm trying, we don't have this poll, so let's just here's what I'm gonna do. We will is this business attractive? We will just relaunch that one. And hold on one second. And when we relaunch it. All right, cool. Oh, there we go. There we go. Thank you.
There you go. 6 choices here. So I own it and I want to own more. I own it. I want to reduce my position. I own it and I'm good. Don't own it. Want to buy, and don't own it. Not interested.
While people are answering, Melissa says, because it's such a huge part of the market, how much does auto flow of money into index funds keep Apple price high? That's a good point. I don't know how much, but certainly that does have a buoying effect. However, Melissa, it can also work in the opposite direction, where if people all of a sudden start running from the market because it's such a huge part of many ETFs, it can draw away from that as well.
That's hard. It's hard to know how much that matters. I mean, Morgan Housel has pointed this out before. Who was the #1 buyer of Apple stock in the open marketplace? Do you know? It's
I would.
Apple.
Oh, yep. There you go. That makes perfect sense.
Apple is the ultimate buyer of Apple stock, and Apple has essentially been. I don't even know if they look at price or valuation when they're buying Apple stock with their huge buybacks that
Yep.
they're doing. So yeah, people automatically contributing their 401k. Apple is getting like what 6-7% of all contributions, something like that, given its size. So I'm sure that there's a bullying factor there,
So,
but that's been the case for a long time, and it hasn't prevented Apple stock from going up and down.
so Brian, we had two, and this answers Cass's question. We have two answers that rose to the top of buy, sell, hold. Number one is don't own it, not interested. To be honest with you, that's where I am at too. The main reason for that is that if I were to hold a company like Apple that, as we said, revenue's just kind of gone sideways, I would be holding it because I believe that the downside was limited. And for a stock like Apple, for the downside to be limited, valuation would be even more important than ever. And given the valuation, that's not where I'm at. Second place was I own it. I'm good to hold where I'm at.
Key question for you is what do you want? If you're going to be buying individual stocks, what do you want? For most people, what they want with an individual stock is market outperformance. That's not the only thing that you can want. Some people want lower volatility. Some people want income. Some people want shareholder yield. So if you're the type of person that's buying Apple stock and your goal, what you want from it is strong market outperformance, I would say the odds of that happening are against you, given the valuation
Right.
today. That's
And the
my
size.
hunch. That's my hunch. If you're looking for stability and low downside and income, then Apple might be giving you what you want. But if I had to bet, is this company going to beat the market over the next 5 years or lose to it? I would say lose. You?
I'm not going to say win or lose. Again, I'm just going to go back to, for me, I am totally fine owning businesses like Apple because I believe that it does have a wide moat. But if I'm going to own a business with a wide moat like Apple that I know doesn't have 5-10x potential, then I want to know that the valuation is favorable. And right now, I don't think that's the case.
There you go. There you go. Okay, any other questions? So Fadi said, did I make the right decision by selling? I think my logic was sound for selling it. And if Apple's valuation was the same today as it was when I sold, this would be a market underperformer, a dramatic underperformer. I didn't anticipate the valuation tripling after it's
Um,
sold. So I think I was largely right with my business analysis. I was completely wrong with my valuation analysis.
Well, and I think that one of the things that stock simplifier, because remember, we made this to be simple. One of the things that we didn't throw in there is dividends, share buybacks, things like that. Like that's not a huge part of our analysis here. And Brian, I do think that that's a huge part of the narrative of what's happened with Apple between when you bought, like
Mm-hmm.
it's pretty much just two factors, right? The two factors that made it a winning investment from when you sold to now is one, the huge COVID bump, and
Yep.
two, share buybacks. And
Yep.
that's it.
Yep.
So,
I don't think it's impossible for this company to achieve that 10% EPS growth rate. Actually, while we're here, we do have a couple of minutes. Let me just show you one thing. In Fiscal AI, if you go here, I'm in the financials and income statement. If you go down to diluted shares outstanding
I
and you
mean, this
pull
is
up this
something
chart,
else.
so they really started buybacks in 2012. That's basically when Steve Jobs died, right?
Yep.
He was like totally against it. So let's just look at the last 10 years. If you look at the last 10 years, I put this in the email, but minus 4.3%.
Per
So
year.
the share count has declined 35% in total, or you've gotten a 4.3% return annualized just from stock buybacks. just from buybacks. So they have a cool metric called, I think it's in, yeah, here it is, shareholder yield. Shareholder yield. So this is in key metrics, and if we took this up, what shareholder yield shows is it's buyback yield plus dividend yield. So both of those together. So for companies that are heavily into buying back their own stock, what is the total shareholder yield that you're earning if you buy the stock today? This is a total shareholder yield of 2.8%, which is not bad. Quite good. You can see that when I was selling back here.
Well, right. I was going to say, so that might be the learning, right? That might
Yeah.
be the thing.
If a company has a shareholder yield of 10% and you think it's a good business, don't be in a rush to sell it.
Hey, just
And yeah,
one question about that, because Jose just said, how much excess cash does Apple have right now? And that's something we can find out pretty easily on here as well.
yeah. So total cash and cash equivalents are 55 billion,
They
but
do
the
hold a bunch in long-term investments as well.
long-term investments are 77. So what's that?
130.
122 billion, and they have total debt of 80. So they have 40 billion in net cash. But even beyond that, how much free cash flow is the company generating? So free cash flow is 96 billion. So, I mean, if the company devoted 100% of its cash flow to buybacks, they can buy back basically $100 billion each year. And that's just about what they've been doing.
Yeah.
So essentially, they make money and they plow it, almost all of it, into buybacks. The dividend is only 15 billion of the 100 billion. So the dividend is tiny compared to the buyback yield that they're doing. So this is very much a capital return story, hence why it's in the capital return phase, and it's all about the buyback basically.
Hey, Brian, Munir is asking, do you need a subscription to Fiscal AI to use Stock Simplifier?
No. Nope. We designed Stock Simplifier so that you can use the free version of it, and I think they just the free version of it. You can actually. I think I can change this. Yeah, if I go to the free version, so let's change it over to the free version. If I go to the free version, I think you get 10 years of data.
I thought it was 5, but
they recently changed it.
Okay.
Yeah, so this is what the free version shows. 10 years of data. 10 years of super high quality data in the free version. What you don't get is you don't get the estimates. You don't get the estimates in the free version, but you do get the estimates on the overview page. So yeah, this is a big reason why we're partners with Fiscal AI, and they are a sponsor of our channel. But the free version of Fiscal AI is outstanding. It's
Yep.
just outstanding.
Yep, I totally agree.
All right. Well, with that, we do want to remind you that Stock Simplifier, everything that we've done here is included in the Stock Simplifier. So you do get the self-paced course. So if you're like, what did that term mean? How did they look that up? Why is that important? We explain everything in the full course. You get access to the spreadsheet tool that we use, which is powered by Google Slides. You get access to all of the prompts. And as we upgrade the prompts, which I guarantee we're going to be doing, you'll get access to all of those upgrades. Stock Simplifier is also, you get a 30-day money-back guarantee. So if you try it and don't like it, just let us know. We'll give you a full refund in 30 days. So Brian, if you could share that link in the chat and on YouTube one more time, it is well, you can buy Stock Simplifier through this for just $99. So thank you guys so much for joining us today. Next Tuesday, October 28th at noon, we're going to continue on with this series, and we're going to be looking at Meta's stock. And then next Wednesday, a week from today, we're going to be looking at Microsoft stock. If you register for this event, I will send you an email in a few hours with a link to the replay of this event, as well as some key takeaways. So thank you. Thank you guys so much for choosing to spend an hour with us. We really appreciate this, and we're excited about this series, and we hope that you guys like it, because we will keep this going if there's demand for it. Yep. I also heard from people they want us to do Mercado Libre. They want us to
I
add
heard that
C
too.
Limited to this. So if you have stocks that you want us to run through this process with that interest you, please let us know. Reply to the emails or put them in the chat on YouTube or put them in the chat here. We're happy to consider stocks.
One more thing to throw in there. Tesla reports earnings tonight. I will be dropping a video on our YouTube channel about that very same thing.
Happy Tesla earnings report day to everybody.
All right.
Yeah. Thanks so much for watching, everybody. Brian's out.